What's going on, guys? It's the Dragon back today with another video. In today's video, I'm going to be going over my simple break and retest strategy, which if you've been inside my VIP Telegram group, you will know we absolutely smashed it this week. We absolutely destroyed it. We lost maybe one trade and won about 7. Completely smashed it out of the park. Now I'm going to be going over the strategy I use for a significant portion of these trades and how you guys can apply it to your own trade. So without further ado, let's get on to this. Here we are live on the charts, and what I'm essentially going to show you is the 2 ways people use trend lines and why I use my trend lines the second way, which is a lot better in my opinion. So number 1, the way you've most likely been shown trend lines and the way you most likely trade them is as such. You would see one touch right here, you would see a second touch of a trend line right here, and on the third touch you would assume that the price would reject it. This one didn't quite work. I'm going to look around see if there's any others. So here we'd see a second touch and assume it rejected the third touch and try to take short trades right there. And then on the flip side, we would hopefully see a similar effect occur if we were to take longs right here, for example, a second touch, and then on the third touch, you see a long move happen right there. Now, that is the prevailing idea behind trend lines, that you will take a bet on the third or maybe fourth touch, and then the price will reject off the trend line, make a large enough move to where you'll make profit, and then make money. However, in my experience, and most likely your experience live on the Forex markets, it doesn't actually tend to usually work out this way. Usually, the price will do one of a few things, which I'll literally just demonstrate right here. So for example, you'll create your trend line, and rather than rejecting off it for a long time, you might take your bet, and before you can have a chance to really make any decent profit, the price just breaks through. Or alternatively, you might create your trend line, for example, let's say one here. The price completely just ignores it exists and just slides through as if it was there. If I'm to scroll somewhere else, I could take an example right here. Once again, the price basically ignores its existence. Let's try to find a shallower one right here. The shallower one, it worked out a few times right here, so this is a good example where it worked out. And we see 3 large touches in a downtrend, let's hope. And as you can see, the third touch, not a large enough move to make profit on before it stops you out. And this is the big downside of trend lines. This is why it's so difficult, and even though it seems really easy when you see traders trading online, there's a whole bunch of other things they're doing as well in order to make their trendline strategies work out. Now, instead of using this, what I'm going to be showing you is something far more potent, and what I personally use in order to essentially ensure that at the very least the price action is always reacting off of my trend lines, and this is the break and retest strategy. So after seeing those random trend lines not work out, I can actually draw out trend lines which got broken and look at the retest, and I'm very positive that they're always going to get reacted off. It doesn't always mean the price is going to go your way, but you will always at least see a reaction and know that the price cares about your trend line. Let's take this for example. So let's say you have a trend line right here, you have one touch on the wick, one touch around the peak of this one right here, and on the retest, the price rejects perfectly off and makes a large move to the upside. Let's take a look somewhere else. Right here, we have closures which are far closer to horizontal, so we have touch 1, touch 2, and as you can see on that third touch, the price comes back, retests, and completely drops. If I even just keep to this time period right here and I take a different retest, I have touch 1 right here, we have a retest touch right there, and although the price comes back to break through, it's at least reacted off of this trend line, which is what I am always certain will happen. And this is significant because it tells you that no matter what, your trend line is valid and that the price cares about it. You'll never see it just slide through without giving some sort of retest, some sort of resistance, some sort of reaction to these trend lines. Let's take one more example, and then I can fill out the strategy for you guys and tell you about the other confluences which we use. So, see one touch right here, second touch right there. As you can see, the retest gets respected and the price drops a little bit. Second retest, another reaction. Third retest, another reaction right here. These are kind of messy, but you can get the general gist of the idea, right? Now, not every single retest in the game is born equal, so not all of them are going to get reacted against perfectly. And as we've seen, sometimes the price might just give a little reaction and then break through, or sometimes it might give a big reaction. And it's your job as a break and retest trader to know exactly which of these is going to occur. Because obviously, only one out of those 2 situations is going to make you any good money. There is a few ways you can determine this. So number 1, this is the trend direction. If I just zoom out very fast, you'll be able to see the macro trend right here is a very strong downtrend. It's been a downtrend for a good long while. It's been months upon months upon months that it's been in a downtrend. Looks like it changed there. So you have a downtrend all the way down here. And so you want to have a strong bias to the downside when you're taking your trades. And what that means is that your break and retests, you only want ones which suggest you should take a short trade. And if I now zoom in, I can show you suggestions of this. So for example, we have one touch right here, second touch. The third touch, if we zoom in, let's see what happened. We had it break above, retest on this candle, bounce off it. We had that reaction, then it breaks through again. Now we're looking for a short trade. As you can see, the price comes up, gives us 2 bearish candlestick patterns, and then completely drops. And these are the kind of trades you want to be looking for, right? Because if you're trading against the trade, there's far more risk. You're going to get more price action like this where the price slides through and never goes your way whatsoever. So that's number 1. And number 2 is that you generally want to be making sure your trend lines are horizontal. So in trading, the more vertical your trend lines are, the weaker they tend to be, and the more likely you are to get stopped out regardless. And while this applies for regular trend lines, in break and retest, it generally just tends to be, if your trend line is too steep, the price just won't return back to it and you won't make any money. So here's an example of that. So you have one touch right here, a second touch right there. The price doesn't really significantly come back to touch it, it sort of escapes from us this trade. And that'll happen a decent amount if you go for these super vertical trades. What I would recommend is usually actually going for slightly more horizontal ones. That way you're more likely to have the price reverse and actually hit your target. So for example, right here, you have touch number 1, touch number 2, and on that third touch, the price impeccably reacts off it and just bounces straight downwards. And even within this same area right here, I can just draw a second trend line, touch 1, touch 2, touch 3. I think the third touch is more adequate right here. We see a break below, retest, price bounces, second retest, it really drops right there. That risk reward more than covers up for any losses you might take. If I was to take another one, which is a little bit riskier, a little bit more vertical, as you can see, the price comes up, it sort of slides up against it for a little bit, but then it does drop and make a huge descent. Now, the strategy alone isn't going to take you all the way to profitability, but what you can see is the price will give you strong reactions off this, so when you start combining it with things like the RSI, now you're starting to get a picture for how you can take large trades and know where the price is going to move from this point onwards. And if risk reward is your thing, this is how you get that. So I advise you guys to practice this. For more tips on my life trade signals, join my Telegram, link in bio.